All right, let's take a look back at this day in history. November 15th, 1971. The first U.S. money market fund began operations, sparking a new investment trend that over the next 50 years blossomed into a $7 trillion business. Bruce Bent and Henry Brown, two financial advisors, frankly, with scant knowledge of the complexity of even starting a mutual fund, came up with the idea as they debated the recent doubling of the inflation rate at the time to 6%. Inflation that was depriving bank depositors of any beneficial real rate of interest. Higher yielding alternatives like treasury bills and jumbo certificates, they did exist, but were clunky, illiquid, and had minimum purchase amounts of $10,000 or even more. And that put them out of the reach for most Americans. But Bent and Brown felt that their reserve fund could pool money from small investors and invest them solely in those instruments. It was a timely idea that would change the course of market history, so much so that famed investor Peter Lynch, in his book, One Up on Wall Street, wrote that there ought to be a monument to Bruce Bent and Henry Brown. And it's not hyperbole either. While the reserve fund attracted just $300,000 in its first 15 months, it would end 1973 with a then breathtaking $100 million of assets. By then, James Benham, who had founded the Capital Preservation Fund in 1974, Fidelity introduced the first money fund with check writing privileges, and 3 years later, Merrill Lynch created its once famed cash management account. But 1977, was considered the breakout year as Treasury rates were beginning an erratic climb to double-digit levels as the Fed fought an outbreak of inflation. While interest rates surged, regulations at the time limited the yield that bank savings account could offer to just about 5.5%. Money market funds, there were no such restrictions. They were offering rates of as high as 17%, rivaling and in some cases exceeding annualized gains in the stock market, but with infinitely less risk. Yesterday, Crane Data issued a fresh report showing U.S. money market funds surpassed $7 trillion in assets for the first time ever. That's up more than $1 billion in the past 12 months, a pointed rebuttal to questions over whether the industry could remain in vogue as the Fed began to cut interest rates.